Alright, today's video is a little bit different. Live trading, basically. But it looks like there's not any setups right now. I'm gonna show y'all what I would do. So I went to the 1 hour, mark out London's low and high, buy side and sell side. There's only a 1 hour sell side. This buy side was taken out though, so I just marked out this right here, which was even if it does hit it, it's not London session, so I wouldn't trade it if price reached it in like reverse. That's usually what I do. I just mark out buy side and sell side on London session. I go to the 5 minute, um, and I just wait for price to reach a level, either buy side or sell side from London session. So I'll just wait for it to hit down there. There's like a little trick to see if how much leverage you should put in, how many contracts you should put in. Doesn't matter if it's micros, minis. To see whether price is expensive or not. So price, like whether you use three micros, is not gonna be the same value as it would if price was expensive or cheaper. So if I go here, I use it's called the price range. Go here, go where price is at, and then go to the percentage of usually where your um where your stop loss or take profit would be. If it's so, for example, if I use four micros, it would usually be 42%. So right here, 42%. If it's really short, it's just telling you that price uh is really expensive. But if I go, let's just imagine I did this and today was cheap, 42% wouldn't be up to here. It would be all the way down here. So if you see 42% isn't like this range right here, then it just means that price is expensive. And if you see 42% would be this long, somewhere around here, just longer than this, then it would just mean that price is just on the cheaper end and to leverage more than you normally would. That's basically what I look for. Um, yeah. Um, it's not really anything happening. I don't think these levels are gonna be touched. Um, but we're gonna wait till like 10. Even if price does reach this level, I'm still probably not gonna trade, to be honest. Just because it's just way too far. Price is way too expensive. So since I checked, 42% is really short. That just means that I'm gonna have to go four and below of micros, four contracts of micros. Um, so that's my leverage today. I put three just to be safe because on four micros, my stop loss would be 7%. And as you can tell, this would be my stop loss if I enter right now. That's super tight. So, I would probably enter on like two contracts if I do enter, just so my stop loss would be a little bit wider. It would be at least 10%, at least something like that, like around here. Um, yeah, I mean, we'll see. If the MACD reverses to the upside, I'm not. I'm just getting off. I'm just gonna lock the account and just get off. I'm gonna look at the 1 minute to see if it's um strong bullish. Yeah, it is. Not really. Not really. Looks like a sweep up here. So one thing about the 1 minute is that it'll teach you basically entries. Usually when I enter a trade, I'll just stay on the 1 minute. It'll just tell me what's like the trend. The 1 minute is just gonna tell you early on when to enter, like when you should enter, and look, you see it's a sweep. But the 1 minute will just tell you like early on everything. Like it will just show you signals of like early signals of like when you should enter, when you should exit. For example, if let's say you enter on a short here. Let's say you enter on a short here, right? You look at the MACD, it's dropping, but then you see these histogram bars is weakening. They're turning lighter colors. And you see the signal line bending, and you see the MACD line bending with it. That's just telling you, hey, look, price is going to reverse, basically. So it starts bending right about here. So let's say you enter like right at the top of this candle right here. It starts bending, it starts weakening here, right? As you can see, let's say you enter right here, right? At this purple line. This was your entry, right? It dropped 29%, right? So by the time it started weakening, it was at this candle right here. This candle right here. So you see, once we're right here, that's when price started weakening here. As you can see, this was the first light red candle. MACD line started bending. You can see a curve in the white line. So just telling you that, hey, look, price is about to sweep up. So what this gives you is time to cut your profits early, right? So you could have some profits, or it could tell you to put your stop loss to break even, and then you just won't lose anything on the day. But before it actually sweeps up, it'll tell you, hey, look right here, it's weakening. There's a chance that it's gonna sweep up, and you're gonna lose your profits, but you can cut it short because you're on the 1 minute and it's telling you early on. So that's like 1 minute is very important. The 5 minutes just gonna tell you, hey, look, it's gonna reach this level, right? Let's say let's say sell side was like right here, right? Let's say this was sell side. This was my sell side from London, right? When price reached this level, I'm waiting for this light red candle right here and a curve, right? When I see that light red candle, I switch immediately to the 1 minute. I go to the 1 minute and then you wait for what I just showed you, the curve on the lines and the histogram bar to weaken, and that's gonna be your entry right around here. And take profit. Let's say you enter this right here. Let's say you enter here. Take profit would be all the way up here. So 1 hour tell you liquidity, buy side and sell side. Then 5 minute will tell you when to prepare to and like to look for entry, right? 5 minute will tell you when price reaches liquidity, and the 5 minute will tell you when to go to the 1 minute to look for an entry. Then you go to the 1 minute, and that's when you entry. That's your entry point. It's the 1 minute time frame. You only enter in the 1 minute time frame because that's gonna tell you early on when you should prepare to look for an entry. So here you see this is good price action right here. Like if this like just imagine like if that was liquidity, this would be considered a good price action. But it's not because or at least for me, right? I don't know who would make money off of this, but for me, I only had a sell side on from London session. I had no buy side. I would have had this, but it was taken out by this candle right here already. Um, this would be buy side from Mason session, Sydney session. Wait, I don't. No. This would be buy side from New York session from the previous day. So a previous day high, but I'm not trading that. And you can see that price is a little bit consolidating. It's going up and down, but price is expensive, so you can still look for an entry there. But I'm not seeing my levels getting hit, so I'm not trading today. I don't think so. Um, it's still in this level right here. This was a good sweep, and I called it before too. That's literally all you look for. That's all you look for. I'll type it right here. Like number one, mark out. This is like small. All right, number one, mark your liquidity from London session on the 1 hour time frame. All right. Number two, go to the 5 minute. Wait at the 5 minute to for price to reach liquidity. And then on the 5 minute, what you do is you wait. All right, so when price hits liquidity, so when price hits liquidity, wait for MACD to reverse. All right. Wait for MACD to weaken, right? Histogram bars and lines, right? So you wait for the histogram bars to weaken, right? When it turns lighter color. Once price hits liquidity. So for example, let's say this was liquidity, right? Price reached it. Next candle, a low histogram bar, a light red histogram bar. So what does that tell you? And momentum was up. That tells you go to the 1 minute. So after that, go to the 1 minute and wait for a signal of a reversal on the indicators. All right, that's all you do. Market liquidity on the 1 hour time frame, right? Wait for the 5 minutes for price to reach liquidity. When price hit liquidity, wait for MACD to weaken histogram bars and lines, right? Which it did right here, right? 5 minute. Then you go to the 1 minute, and it tells you go to the 1 minute, wait for a signal of a reversal in the indicators. So when price hit here, we see the histogram bars weakening, we see the lines bending, and we see momentum going up. What we do is we would enter. It went up 39%, around 41%. It's a good. That would be a good trade if this was one of my levels. That's all you do. That's all. That's the strategy. That's all it is. There's no buys, no nothing. You just mark out your You just mark out the levels, the buy side and sell side from London session, and that's it. This is it right here. This is the whole strategy. If liquidity isn't hit, you don't trade at all. Yeah, I don't think I'm trading today. Just wasn't no subs, nothing. Just staying at this level here. Well, I'm gonna leave it at that. I'll make another video tomorrow.